You're watching Wall Street Confidential on TheStreet.com TV. I'm Farnoosh Torabi. Here is Jim Cramer, co-founder of TheStreet.com. Hi, Jim. Brookfield Asset Management. You talked about that last night on your show.
Yeah, right. I want to just mention this because I do a lot of stocks on the show. I'm trying to be more thematic, but periodically I would just say, look, this is a good one. I have never had this level of sophisticated outpouring by people who coming out of the woodwork who I really respect saying, I own Brookfield Asset Management, some very good hedge funds. This guy Flatt is clearly, I think, very much could be the next Warren Buffett. I got Brookfield Asset Management from StockPicker. StockPicker had run a series of the next Warren Buffetts. I urge people to go to StockPicker because this is where I get a lot of my ideas. This Brookfield Asset Management is a power infrastructure real estate play. It's a global play. It's misunderstood. I waited until the stock had a real pullback to recommend it, but I want people to go take a hard look at this. I have been recommending over and over again that Sears could be the next Berkshire Hathaway. I think this Brookfield Asset Management could also be the next Berkshire Hathaway. I think every portfolio has to take the risk reward here of finding the next Buffett because it was just so lucrative to buy $200 one share in 1981 becomes $100,000. I am now nominating Brookfield to be an international Berkshire Hathaway, as I think that Sears is a domestic Berkshire Hathaway. Sears under tremendous pressure here, by the way. Some of the stocks I really love under tremendous pressure, Goldman Sachs. I want to remind people that the companies view the tremendous pressure as opportunities to buy. And you don't want to, not to, this is a little bit away from Brookfield, but you don't want to sell to the companies. It's historically been a bad thing. And Brookfield is an opportunistic company that I think that in this environment you want to say, okay, look, I don't get to buy the next Warren Buffett at a discount typically. I'm getting a moment now to do it. And, I think that people should understand that a sell-off in a healthy environment where inflation's under control and interest rates are stable, which is what 4.75 to 5.25 is. It's stability for the 10-year. Is a great opportunity to pick up leadership names like a Sears or like a Brookfield or like a Goldman. These are all asset managements. That's why I like them. They aggressively manage their assets, and that's what you should be buying.
All right. Thanks, Jim Cramer on Brookfield Asset Management. Stay tuned for more of TheStreet.com TV.